Today's episode is by far one of my favorite episodes that we get to record, and we only do about 4 of these per year. But on today's episode, we are going to take 5 questions from our fan base, our listeners, or our viewers like you on YouTube, and we are going to answer them as they came in. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Dio, what's poppin'?
JC, I am back from Cousin Palooza 6.0.
How was that going sober? Probably sucked balls.
It didn't suck balls, but I tell you, it's a different experience. For those that are tuning in and following along, I am 30 days of going no caffeine and no alcohol.
How do you feel, like a better person? It's just like 75 hard, except halfway.
Except no. The caffeine headaches are legit.
You're having withdrawals from caffeine?
Oh, hell yes.
Fucking addict.
Dude, I was 2 cups of coffee a day, plus I did my pre-workout 4 days a week before my lift session at the gym.
People say how much I spend on drugs a month. How much do you think you spent on coffee per month?
No, I make my own coffee at home, so I probably was spending less than $1 a day. It was a rare treat for me to go to Starbucks.
Starbucks?
Yeah, now I would still go to Starbucks at least twice a week, so I guess I was spending $10 a week on Starbucks.
There you go.
But I wasn't spending like $10 a day on Starbucks. But yeah, no, so we got to Cousin Palooza. This year it's Cedar Bluff, Alabama. Never heard of it.
Whoa.
Yeah, just call it BFE, Alabama, but it's on a lake. You're
Florida.
Basically 2 hours outside of Birmingham, 2 hours outside of Chattanooga, 2 hours outside of
And who threw a dart in the dark at that map too?
Shout out to cousin Laura Dance. So Laura Dance is the cousin. My wife's one of 19 cousins. And if you're 21 and up, you get invited to this trip.
Cousins.
Yeah, she's one of 19 cousins. She's the oldest. So we have cousins that are even younger than my children, who they are not invited to
I don't
Cousin
understand
Palooza.
that math, but okay.
Okay. Well, my wife's 46 and she has cousins that are 18. So 18 to 46, her mom was the oldest of 7 children, and those siblings
Just offspring everywhere.
just all had kids. Yeah. And they're cool ass people.
Speaking of offspring, did you know, because I have a slug that frequents my driveway every morning, and do you know that they're asexual? And sometimes they can reproduce just like without having like a reproductive partner.
No way.
Mm-hmm.
I have some friends that probably very much would either see that slug as their spirit. It's not even an animal. What is it?
It's something.
Is it an insect?
No, it's one of those in between.
Okay, we should like do a story on our Instagram. Like, what is a slug?
Yeah,
Insect, animal.
I like slugs, man. They're cool, man. But
Okay.
yeah, so
have you ever poured salt on a slug?
No, I don't want to kill it, Dustin. But do you know like the mucus that they leave behind? If you take it, actually really good for your skin.
So you rub it on you.
I've never done it. It just
Supposedly.
that's what Claude told me.
Okay. Hey, your friend Claude coming through for
Hey,
you.
shout out. If you need therapy though, like just go to ChatGPT because he's not biased. He doesn't have any, other problems bother him. He's a good friend to talk to.
You will be that guy that in 5 years you will have 3 best friends that you've never had before that aren't even humans. But you talk to them, they talk back, and the best part is they don't care that you smoke weed all the time, play video games, and never leave your house.
I know. That's what
They won't give you shit for that.
I know. Sorry, I interrupted your amazing story about Cousin
No,
Palooza.
I just look. You asked me, hey, what's popping? What's popping? I just got back.
So how was it? You went there sober. It was in BFE, Alabama. The flies were biting.
The flies are crazy
I know,
there.
it's fucking
You must have
swamp.
been.
No, I just know it's hot. You probably
Yes.
got bit up. Anyway, so let's
let's jump into this, John.
Okay.
I know you have places you got to be.
This is bullshit because now I have to like be an active participant in this episode, and as everybody knows out there, I hate doing this shit. So let's get it over with.
All right, let's go.
All right, so Dustin, set people up with
Well, I set them up in the soft intro, but just as a reminder, one of the things that I like to do, I love to talk current events, and I love to take like calls or emails from viewers and listeners. In fact, I take them weekly, if not daily.
Yeah.
I love it. Like Dustin Owen on LinkedIn. That dude is very accessible. If y'all ever have any questions, reach out to me.
All right, so let's go. Question number 1. Carlos in Atlanta asks, now listen to how I ask these questions because a lot of people, kids out there, they can't even read. Kids nowadays can't read, they can't write. But listen to my enunciation as I ask this question because it's a storytelling process when you articulate
You're going to
it.
articulate it like a newscaster
Listen,
from the Midwest.
Dustin, besides rates and fees, What's the primary value proposition you offer to clients that makes you stand out?
Ooh, Carlos and the ATL. Okay, so great question.
Yup.
And for some of the OGs out there, they could probably answer this better than me.
Okay.
But Carlos, I would first say, why in the hell are you leading with rates and fees? That is not our job. We lead with advice. We lead with service, right? We lead with our professionalism, our accountability, our ability to be connected to that person. By connected, I mean like how accessible are you? But if you're talking about a borrower, I don't lead with rates and fees.
Well, that was their first question, so I can't ignore their first question, Dustin.
Okay, well then I'm going to say stop leading with rates and fees. I would let anyone know that, look, there's no such thing as a one-size-fits-all mortgage. By working with me, I'm going to tailor-make a loan that is going to help you not just qualify for the home, but it's also going to help you best accumulate wealth, best afford your lifestyle, best have money left over to save for retirement or pay off negative debt such as credit cards. But like, I don't lead with rates and fees. If that's the actual consumer, and definitely not the realtor. Like, I never sell myself to realtors like, hey, refer me your buyers because I'll get them the cheapest interest rate. Just like realtors don't say, refer me your friends to sell their home because I'm gonna list it at the cheapest commission. No, they say, I'm gonna get it sold in the quickest amount of time. I'm going to make sure that they're protected. I'm going to make sure that they get the highest amount for their home. But they don't say I'm going to list their home for the cheapest commission. I don't also sell myself to realtors, nor do I sell myself to borrowers as being the cheapest. I need to be competitive. And I want people to know that. I need to be transparent. I want people to know that, right? Like, I've learned from others in this industry how easy it is for me to flip my screen around or screenshot or screen share. I'll show you my pricing engine. I'll show you the rates that I'm seeing. I will talk you through what it means when something shows up as 99.2 or as something shows up as 100.4. What does that mean to you? How does your interest rate correlate to that scale? Meaning the higher interest rate was at 100.4. What does that mean? The lower interest rate was at 99.2. What does that mean? And I'll let the consumer choose their own interest rate. But I don't go out and sell myself rates and fees, nor do we coach it. But I do need us to be competitive. I want my clients and my customers to know, hey, I'm competitive. But at the end of the day, and I tell them this, at the end of the day, we all borrow our money from the same people, right? We're going to warehouse lenders and they're giving us a warehouse line of credit, and that's where we're borrowing our money. Now, if we're a bank or a credit union, we may be going to our depositors, at which point we're paying our depositors money, interest to deposit their money with us, and we're leveraging some of that money. But even most banks are operating off a warehouse line of credit. So we all borrow our money from the same place, and we all deliver our money to the same place. What? We deliver it to investors, to Wall Street, to aggregators, Fannie Mae, Freddie Mac, or we're pulling those securities and turning them into Ginnie Mae securities. So if we're all borrowing money from the same place, ma'am or sir, this is me talking to consumer, and we're all delivering the loans to the same place, I can't imagine any one of us is going to be drastically different when it comes to rates and fees. Sure, someone may be a couple $100 more or less in their fees. Someone may be an eighth or a quarter better or worse in interest rate. But neither one of those things will ever stop someone from purchasing a home, or at least it shouldn't. At least it shouldn't. I mean, I know there's those one-off exceptions that at 6.5, the person qualified and we were able to get them through AUS, and at 6 3/4, they didn't qualify. Like, don't kid yourself and don't kid me. I've done enough loans. I've played all the tricks with AUS. I've gotten the cheaper insurance in order to get my DTI down. But for the bulk of buyers, $300 savings in closing costs is not going to make or break the transaction. And whether the rate is 6.5 or 6.625 is not going to make or break the transaction. So I don't lead with rates and fees. If you're a consumer, I lead with service. I lead with my consultative approach. I even lead with my accessibility, but not just my accessibility to the borrower, my accessibility to the listing agent. Because I tell clients straight up, look, by working with me and my team, I'm going to help you have your offer, especially in a multiple offer situation, which isn't happening as much today as it was a couple years ago. And it's not happening as much today as it will next year or the year after. But next year and the year after, we will start seeing more multiple offer situations. I'm telling them, like, I help you get your offer accepted, right? Because you want a home, you don't want a mortgage, right? Nobody wants a mortgage, but they want a home. But only 20 to 25% are paying cash. That means 75 to 80% need a mortgage. Okay, you need a mortgage, although you don't want a mortgage. but you want a home, I'm going to help you get the home you want at the price you want it, because I'm going to advocate on your behalf with the listing agent, right? So that's what I'm saying to the consumer. To the realtors, honestly, if realtors only care about working with lenders who are the cheapest fees and cheapest rates, they're not a good partner. I'm out. I'm out. Some will, some won't. Who cares? Move on. But most realtors, what they care most about is that I do what I say I'm going to do, that I pick up my phone, that I don't ghost them or their buyer, that I help get their offers accepted, because realtors only get paid when transactions close. And more specifically, they care about lenders who care about their business. And as a lender, I need to find ways to help realtors generate more leads, convert more leads into actual transactions, and then how do I help them get more referrals from their past closed transactions? Those are all things I do, like with the mortgage branches I run. They're also all things that we coach over at T-Lop Originator Coaching. Next question, John. Thank you, Carlos. I appreciate that, buddy.
Shout out, Carlos.
And thanks for tuning in.
Yeah, shout out, Carlos, for that amazing question. Amy in Ohio.
Amy in Ohio. Ooh, I wonder if she's in C-Bus or is she in Cincinnati? Where's she at?
Probably a dump if it's in Ohio. Anyway, given
not if it's Cincinnati.
Why you like?
I like Cincinnati. Yeah. And truth be told, because of our affiliation with Lower, I have actually grown to like.
Watch your mouth.
Like, I didn't say love.
What?
Like Columbus.
Yeah,
I like C-Bus.
Because they gentrified High Street, and now you can actually walk down there safely.
I like C-Bus, and even New Albany. New Albany is pretty nice too.
Albany, New York?
No, New Albany.
Never heard of it.
Okay.
Given rates have not come down, what are ways lenders are making home ownership more affordable? I can take this one. Simple, they're not. Because
next question.
Next question.
No, come on. Let's give Amy something better than that.
All right, go ahead as my eyes gloss over. Give them a more detailed.
I won't take as long as this one as to do with Carlos's. You can tell Carlos has kind of struck a nerve in a way, in a good way. Amy, so in order to make homeownership more affordable, this is that whole consultative approach that I was talking to Carlos about just a minute ago. But we have to look at the total financial picture. I know that your consumer is looking at a payment, but really and truly what they're looking at is a budget. So have you ever sat down with your client and walked them through their budget? Mm-hmm. Like, what do you as a loan officer know about budgeting and budgeting best practices, or even like the most basic financial principles for somebody to be a fiscally responsible human being, right? Like I'm talking 6 months reserves. I'm talking how to get yourself out of credit card debt, saving for retirement, like just best practices. Whether or not you should have disability insurance, when and how life insurance would play into the picture. We as loan officers should be able to have those conversations. Even though we're not financial advisors, we should know enough about that world that we can incorporate some of that into our practice. So the first thing I'm going to do is I'm going to talk to them about, you have X amount of dollars coming in every month and X amount of dollars going out every month, right? They may have thought they needed a $2,300 a month payment, but really what they needed was no more than $4,000 exiting their bank account. Mm-hmm. Okay, so let's look at what are they playing with. Now, if somebody's playing with minimal assets, there's not a whole lot we can do, right? There's not. We can play around with lender credits. I mean, and what I mean by this, if somebody's coming to me and they have just enough money for their 3.5% down. All right, cool. I can put them into an FHA loan or a conventional loan. We can get the seller to pay their closing costs, and then after that, that's about all we can do. But if someone's coming to me because they just sold one house and they're buying another house and they have $100,000, in that person's mind, they're coming to me and they're thinking, hey, D.O., I'm going to put all $100,000 down. I'm like, you're buying a $450,000 property. That's 20% plus enough for closing costs. That makes sense. However, what if I showed you an option where you put 5% down? What if I showed you an option where you put 5% down, you had no monthly mortgage insurance, and we took this other money and we gave you 6 months reserve, we wiped out your credit card debt and paid off your car that you just bought a year ago, and you have 60 months left because you did a 72-month car loan on it. Like, does that make more sense for you long term than you putting 20% down? And ultimately, in that exact situation, what I showed somebody is that we did a 95% conventional loan. They put 5% down. We used a seller credit to basically buy out their mortgage insurance. So now out of their pocket was the 5% down plus their closing cost. Seller credit bought out mortgage insurance because mortgage insurance does not have to be paid monthly. You can pay it all up front. Sometimes the lender can pay it. Sometimes the borrower can pay it. If the borrower's paying it, why not use the seller credit to cover it? You can also do what's called a split premium, but we won't dive into that. But there are ways to actually split it up. And then by taking that extra money and giving them 6 months reserve, like think of yourself, John, would you sleep better at night knowing you had 30 grand in your bank account?
Yeah, knowing it would be gone within minutes.
Well, for you, yes. But for the rest of us, it wouldn't. Like, yes, you would sleep good at night. And then if you paid off your credit cards, which let's say you owed 15 grand on them, and you paid off your car, which let's just say you owed 30 grand on that or 40 grand on that, like, would you not sleep better knowing that your car payment of $700 a month is gone, your credit card payment of $400 a month is gone, you have 6 months reserve, and yes, your mortgage payment is not $2,300, it's actually $2,750.
Oh, that ain't that bad.
No, it's $450. But what did I do? I put money in your bank account that you now have as for reserve funds. I got rid of the car payment and the credit card. So overall, I've just helped this person lower their outgoing cash flow. So for Amy in Ohio, I'm not really doing a whole lot, like in terms of like I can't make rates go down. Now realtors can do things like this hurts us in the mortgage space unless I work for a company that's hardcore into working with home builders. But look, starting to show people new construction, and these builders are offering these subsidized super cheap interest rates. Like that's definitely a strategy that's working. It tends to work against most of us as mortgage brokers and lenders because we then lose that borrower. But I like to play around with, 2-1 buy down, sure. I love to play around with MI. I really do. Seller credits and buying out of mortgage insurance and showing people how they can take some of their assets and pay off some of their debt or put more money into savings. Like that tends to make more sense. Like the last example I would give someone, this is me talking to a consumer about making homeownership more affordable. It's not making it more affordable as much as making it more comfortable. Well, if you put down $20,000 less, the bad news is your mortgage payment is an extra $120 a month. Like that's the truth. Like you finance an extra 20 grand, your mortgage payment is going to be easily 120, 130 bucks more per month. But if you had 20 grand sitting in a bank account, how many times could you literally go to that bank account and withdraw the 130 if you needed it? Right? You're like, oh my God, I can't afford my lifestyle or my bills because my mortgage payment was $120 more than I wanted it to be.
2,000 times?
Well, not 2,000 times, but you could go in there probably at least 80 times.
Damn, I was that far off?
Yeah.
My math is struggling.
Yeah, but like you could go there at least 80 times, right? 84 times, that's 7 years. Are you not going to get a raise in the next 7 years? Are you not going to be making more money?
If you're on my trajectory, probably not.
Are you not going to have had that loan refinanced or that home sold in the next 7 years?
People don't think like that, Dustin.
No, they don't. But those are ways that we in the lending space are having success with overcoming the affordability issue. It's stop looking at that singular interest rate and that singular payment, and let's be a true advisor and let's structure financing that helps these people become better financially overall.
Well, hey, Dustin, you know what you're doing.
And if I don't, I do a great job of faking it.
That's most people who, snake oil salesmen.
Hey, by the way, shout out to Phil again because I'm
using
Phil,
this real talk. I use my mug every day, my little Yeti. That's what I drink my water out of. Keeps the water
Phil
cold.
Rosso.
Thank you so much, Phil. Shout out, Phil. All right. Holly in Sacramento asks, with AI coming on strong, is being a mortgage lender going to be a good career? I can take this one too. Probably not. You should probably do something with your hands.
Did you finish the question? I think you kind of like
no, that was it.
Phased off.
No, I didn't trail off. I just answered it. I went straight into the answer. With AI coming on strong, is being a mortgage lender going to be a good career? ? Yet again, I can take this one. Probably not. You should do something that involves building with your hands.
All right. Well, I'm not going to disagree with John on if you're looking for a recession, an AI-proof career.
Yeah, probably.
If you can learn to work with your hands or like go into maybe the medical field, like patient care.
Teach people how to swim, all the jobs that nobody wanted before 2025.
No. I got the same question from a fan. He's actually with, I think, eCapitals.
Are you going to give the same? Of course, right now is the best time to become a mortgage loan originator. Do you know why? Is that what you're going to say, Dustin?
I'm not going to go down that rabbit hole just because you called me out preemptively.
You have another one.
I got the preemptive.
You got another one in the chamber. You got ready to go.
John, I'm a walking, talking script machine.
Of course, right now is a great time. And if you don't want to hear that script, I got another one coming, Dustin. So what is it? What's the script for this?
How about this? AI scares the fuck out of me.
Mm-hmm.
And it excites me all at the same time, regardless of industry. If I'm a computer programmer,
you're all screwed.
AI scares the shit out of me.
You ain't got no job.
If I change tires on the side of the road,
probably okay for right now.
Self-driving car that pulls up and has all the pneumatic stuff and gets my tire changed right away for me, I don't know.
Yeah, I hope so.
I mean, I was at the doctor's office. I didn't even have to go see the receptionist.
Yeah.
I literally went to a kiosk where it scanned my driver's license. It scanned my insurance card, and I followed the prompts.
Shout out to that place.
Yeah, so AI should scare the shit out of all of us, but it should excite us at the same time. My answer is this. My answer is I don't know, and none of us know. What I feel confident in is AI is going to do more to shape our world over the next 3 years than we have seen technology shape us over the past 20 years.
Well, if you're younger and you're getting in, you should be excited because a lot of the old geezers and the old guard will never adopt AI, and then they'll just get swept under the rug. So if you're young, you should probably be excited about it because, the Luddites don't even know how to send emails, so you should be all right.
We are doing this right now at TLOP. Like, I want to have 2 full-time project managers on staff that literally their job is to be the best at programming and talking to the AI. And the AI is not just chat and Gemini and Claude. There are so many AI tools that are being utilized and AI assistants and AI everything that I want those people to be the best at actually managing AI. Because I think we will need to, as humans, be the managers of AI. AI is only as good as we feed them the prompts and we feed them the information and we ask them to do what we need of them, right? It's no different than like a player-coach relationship. I can have a stud athlete, right? That's a God-gifted, like just athleticism. But without the right coach, without the right nutrition, without the right workout plan, without the right game plan, without direction, right? It's a waste of talent.
Yeah.
However, there will be, just like there are in sports, there will be those that can't coach at all. There will be bad coaches and there'll be great coaches. I think the great coaches will always have a career. So back to, was this Holly?
Yeah.
Was Holly's question? So back to Holly's question, I do believe, and I hope my blinders aren't on, that yes, we in the mortgage industry as originators, as mortgage brokers, we will have a career. However, I've been saying this for over 5 years. It may be a career where I have to fund 20 loans to make the same money I make funding 5 loans. That's all well and good if it takes me 40 hours a week to fund 5 loans a month and 40 hours a week to fund 20 loans.
Yeah, right.
Now, will there be less of us? Sure,
Hopefully.
maybe.
Yep.
No, hopefully not. Right? Hopefully not.
No, yeah, not. No, sorry.
No, I like having 80, 90,000 loan originators that are servicing this industry. Will we need 150,000 the way that we saw in 2020 and 2021?
No.
Probably not. Right? We may never rebuild back to having 150,000 licensed originators. Maybe we stay somewhere in that 75 to 95,000 range because we'll be able to do more because we leverage technology. I will say those that leverage technology will have a career. Those that don't will not. Those that are advisors will have a career. Those that are order takers will not. So could AI do the role of what consumer direct originators have been doing? If you're just order taking, yes. If you're just cherry picking the cream puffs, yes. But if you're truly giving advice, which the first 2 questions, the answers I had were very advisory focused. If you are an advisor and if you yourself are learning to leverage and use technology as it becomes available, then I do believe the mortgage industry will be alive and strong. It will be something that has a lot of human interaction and it won't be replaced by AI.
Well said, Dustin.
I mean, you may disagree, John, but such is life.
Listen, if you're taking your class in the NMLS trying to get certified, yeah, probably finish it out. But if you're thinking about starting now, probably not.
No, probably.
No, sorry. I mean, yeah, probably you should. Sorry.
You should. should. Like, what else are you going to do?
Not being mortgaged?
I mean, like, we may need less doctors because of AI. We may need less researchers because of AI. Like, we'll need nurses and technicians because they do patient care. If you're the type of lender that does patient care, right? Like, you are literally caring for your client.
That could be a good title for a new episode. We should table that.
Yeah, patient care.
Yeah, as one of patient care. That's good.
Yeah, but like I do believe those people are going to be needed.
All right, Travis and Dallas.
Travis and Dallas, or is it Travis in Dallas?
Travis in Dallas.
Okay.
Ask, these names you made up before the episode are really
right.
good tongue twister. What's the?
By the way, if I made up names, it would be like Oscar in Orlando, Michelle in Miami.
You're giving yourself away because you're going through the list of people you know off the top of your head.
No, like Ben in Boston's a real guy.
Yeah,
Amanda in Alaska is a real
guess what?
person.
If there were 7 questions, they would have been on this list.
They would not have been. Go ahead.
Travis in Dallas asks, what's the most unique way you have seen an LO have success in lead generation, Dustin? You love this one.
I loathe this one.
Yeah.
I absolutely loathe this one.
Lather up and get loathed.
Okay, so we have a member of the coaching community. Shout out to Phil Crescenzo.
Shout out Phil.
Phil's up in South Carolina. He
Philly cheese.
Crushes it. I talk about Phil all the time because he's just a good dude.
Yeah.
But he crushes it. Does like $100+ million a year. The bulk of his business is build or turn down. And I wish I could remember verbatim, and I don't want to butcher Phil's story because it's his story, but the way that he got started in the industry, however he was doing it, I would never coach it that way. Okay, I would never. It's not replicatable. It's not scalable, but it made me chuckle. And I can't remember if it was on the Facebook Mortgage Mafia private group that we host, which, by the way, if you're not a member of Mortgage Mafia and you're a licensed originator, you should. It's a fun group. There's probably about 1,200 of us or so. We mastermind. We share best practices. I try to post in there 2 or 3 times a week just to kind of keep the mojo flowing in the right direction. But so I can't remember if Phil did this on Mortgage Mafia or if he did it inside of the actual coaching community over at T-Lop Originator Coaching. But the way that he started his career, I mean, it was like, wow. Kudos to Phil. Look at what he's accomplished. This dude makes bank as an originator. But for the guy calling in from Dallas, who was it again from Dallas?
Travis from Dallas.
Travis from Dallas. You sure it's not Travis from Fort Worth? I know a Travis in Fort Worth.
Listen, I had you take a screenshot of the screen as you typed out the question that you made up because you asked ChatGPT for 5 questions, so we can keep it 100. Or as the kids say, a buck.
A buck. That's a new one, huh? All right.
Travis from Dallas asks.
Travis from Dallas asks. So the answer is no. Like no. I don't have any super unique. Like I'm sure I've heard of ways that people are doing really well in the mortgage industry. I probably don't remember them because I don't care to remember things that aren't necessarily scalable.
Mailers. Use mailers.
Well, there we go.
Yeah, mailers. Yeah.
Look, and shout out. I talked about these guys before. Shout out to the Oxford group at Lower. Right? These guys crush it. They are the #1 branch just about every single month at Lower.
And guess what they use?
And they are mailers. They're 90% refi, and they get their business by sending mailers. Okay, I don't know how to coach or teach that. I would love to have them on the show.
Yeah.
Right? I want to have them on the show so we can talk about it because I'm sure there's some people out there that would like to maybe add mailers as a part of their marketing strategy. So that's probably the most unique way that I can remember. No, most of us, Travis, that do hundreds of millions of dollars or billions of dollars in volume in their careers, no, they follow the same patterns. Kind of like being a personal injury attorney. Do you know why they're all on TV doing commercials? Because they work. Do you know why they're all on doing billboards? Because they work. And if they didn't do them, the next personal injury attorney would do them. Right? They do things because they work.
For the people.
Yeah, for the people. John Morgan right here in our backyard. Yeah, he's all over the country.
Everywhere now.
Yes. Like I was driving through Atlanta coming back from Cousin Palooza, and I saw, God, what'd he say? Oh my God, it's so John Morgan. It's so clever, but yeah, it was a billboard, right?
Yep.
Just another billboard. But no, my point is they work. So we as mortgage loan originators, okay, we can generate our own leads. We can purchase leads. We can call on real estate agents. We can partner with builders. We can work our circle of influence. We can leverage financial advisors. We can work our past client database. I mean, that right there, those 7 ways, that's what works. That's what works. And I found that those that focus solely on generating their own leads, that's a tough game to play, and very few crack that nut. Those that buy leads, that's what they do. Like, their whole machine is built on buying leads. They don't have a whole lot coming in from past client referrals or coming in from the real estate industry. Not that they can't. I mean, I live in a world that I think the hybrid exists. I think the future of mortgage lending is a hybrid where it's a combo of generating my own leads, where we're racing with our realtor partners to get to the consumer first, and still being very relational with our past clients, our financial advisors, to build our community and the real estate community. But historically, if you're buying leads, you're probably not what we call self-gen because you're buying leads. Most of us, it's a numbers game, right? It's not like I go meet a realtor. It's like, no, you go meet 100 realtors.
Yep.
You call on 200 realtors.
Thousands.
You target thousands of realtors. You're trying to find your 15 to 20. That's what you're trying to find. And then from there, you'll cross-sell listing agents. From there, you'll close transactions, and now you have a past client database. From there, you'll market to your past client database and ask them to refer you their family, their friends, their neighbors, their coworkers. But realtors, builders, financial advisors, that's what we tend to coach a lot over at TLOP. And there is mailers that work. There are people who have a whole business buying leads. And then there are plenty that are out there trying to generate their own leads. But no, I don't have anything super unique that stands out. And it's probably because it's not scalable. It's not replicatable. And I'm a big fan of follow the patterns or follow in the footsteps of those that came before you. I mean, we've had some of the biggest producers in the country on this show, guys like Sean, right? Sean, who's now the president of Guaranteed Rate, AKA Rate. Okay. When I interviewed Sean, there was no magic pill. There was no secret sauce. All the things that I just discussed, that's exactly how he built his business and how his team still operates today.
Well said, Dustin.
All right, let's get on to our next. Is this our final question?
Yep, the final question. As a newer LO, where should I invest my money? Oh, my God. Teed him up for the TLAP Originator Coaching Program, didn't you, Dustin?
Ooh. That's a good one, John.
You didn't even see that angle.
I didn't even see that angle.
God, right in front of you. So obtuse.
Wow. No. It depends on where you are in your career. So I was coached early on, and I still buy into this concept, that we should be reinvesting 10% of our pay back into our business.
Hold on. If I just got my license, should I, I've never closed a loan. I've never even taken an app. Should I hop right into coaching? Like, I just got licensed yesterday.
Can I answer that question as a bonus question?
Yeah.
Okay.
If I remember.
Because I like the question.
Yeah.
And I can find a way to parlay it into this answer and then kind of
I'll keep my fingers crossed so I remember it.
Thank you. You know, that's what I do behind under the table. So I start with this. When I thought you were going to go when you were a rookie. When I was a rookie in 2004, hey, I was a rookie, like literally $5,000 in credit card debt,
Let's
no
go.
money in the bank.
Awesome.
Wife's pregnant. Just bought my first house. I had her car payment, my car payment, her student loan, my student loan. I was not making enough money to cover that nut.
It's the American way.
I still found a way, created a way to allow myself $100 a month in 20 years ago, right? $100 a month that I could use to market to real estate agents because that was my strategy. That was what was taught to me as a best practice. Okay, so the rule of thumb is we all should be investing 10% of our income back into our business, right? You make $80,000 a year, that's $8,000 should be invested back into your business. You make $400,000 a year, that's $40,000 a year should be invested back into your business. Now that could be attending conferences, that could be paying for coaching, that could be in paying for certain softwares or technologies, that could be on lunch and learns or past client events or heck, Zillow co-marketing with a particular realtor or even an MSA fee to an entire brokerage, right? Like whatever it is that you're earning, you should be willing to invest at least 10% back in your business every single year. Even if you're a rookie and you haven't made any money, at a bare minimum, $100 to $200. Like you gotta be able to say, I'm taking $2,500 and I'm going to spread this out over the next 12 months so that I can use this to go out and market myself, attend these certain networking functions, pick up the tab at Starbucks, etc. So if I were to say, where should I invest my money? Here's what I've learned. Until you are generating a lot of leads, you really don't need a CRM. You don't. Like, the best CRM is one that you use. You can use an Excel spreadsheet. You can use a spiral notepad. But for you to go out and drop a bunch of money, and I'm like Mr. CRM. Like, I love my CRM. Shout out to Adium. Shout out to Candid. Like dig them. But they're useless if I don't have leads. So the first place I want to spend my money is, where do I need to spend money to generate leads? Not buy leads. I want to learn how to generate leads. Because look, I can spend $3,000 a month buying leads. But man, that's the hamster wheel. I'm on that wheel every single month. And if that's my business model, my business plan, so be it. Like, kudos and congratulations. That wasn't what it was for me. I got plenty of friends who do well in this industry. That's still their business model. I have a buddy of mine that I just connected with out of the Pacific Northwest. And this dude does $20 million a year. He's 27 years old, so he's doing pretty well for himself. And he got started on Facebook ads. Like, not what I would coach, but it definitely worked for him. But what he got started doing is spending money. So I would tell you, your first place to spend your money is on creating your referral network so that you can generate leads. For some of you, you do have to hire a coach, John. Like, hire a coach coming out of the gates if that coach is going to teach you how to generate leads. Because once you start generating leads, you'll start closing loans. You start closing loans, you're making money. Once you're making money, then you can look at your deficiencies. Oh my God, I cannot keep up with all these leads. I'm not doing the best job of incubating them or marketing to them. Bam, I need a CRM. Well, guess what? It's easy to spend $200 a month on a CRM when you're closing loans. So then I would probably do a CRM. Now the next thing would be, okay, I have my CRM working. I'm generating more leads. I'm converting leads at a higher percentage, but I don't have anything from my past clients. Okay, cool. Then maybe I'd go spend money on something like a HomeBot. Or maybe then I'd allocate money to go towards some form of a client appreciation, whether they're gifts or whether they're parties. I want to do something that allows me to stay in front of and market to my past client database. Then as my business grows, maybe I want to now spend money on an assistant, or now I want to spend money on going to a conference. But it takes money to make money. I think all people should be investing in their business. I would tell you, rule of thumb would be 10% of your annual earnings needs to be invested back into your business. And yes, I would tell people to hire a coach before they ever pay for a CRM and before they ever start, dropping a bunch of money on things like Mortgage Coach or dropping a bunch of money on things like MBS Highway. I love Mortgage Coach. I love MBS Highway, right? Just like I love HomeBot and I love CRMs, but you first got to figure out how to generate leads.
There you go.
So that's where my money would be going.
Okay.
Did I answer your question?
It wasn't my question. It was Obadiah's question.
No. I know I answered Obadiah's question, but then you kind of threw a curveball.
Oh, yeah,
at
what
me.
you should buy first. Yeah.
So at the very end, I said, and yes, sure, I'll raise my right hand and say, I do have a biased opinion because I own a coaching company that I want you to come be a part of, or at least check it out.
The best goddamn value in the industry, Justin.
It is the number one value.
What are you talking about?
It 100% is the number one. And we're just getting started. Come grow with us. Literally, we'll lock in the investment you make, whatever that monthly or that annual fee is.
Yeah, I'll be locked in for life. We don't play no games.
No, we don't play games at all. We have people paying $50 a month right now. No, it's all right, because look, right now they can pay for $300. You fast forward 18 months, it'll be $500 a month, right? Because you can get in now. And get locked in. But anyhow, yes, I raised my right hand. Yes, I have an ulterior motive, but my motive comes from I've been lost. I've been broke. I've been scared. I built a business that deemed me a top producer. I lost it all during the crash. I had to rebuild, right? I've funded over 2,000 loans, personal production.
And I've also frozen my credit cards.
Yes, like I've lived it. In looking back, I've learned way more from my mistakes than I have from my successes. I made a ton of mistakes.
Billions.
My goal and our goal with T-Lop, my goal with the show is that we can help shorten the learning curve for all in the mortgage industry, but also I want to teach all the lessons I learned because I became a loan officer to everyone outside of the mortgage industry.
Fascinating.
So I appreciate those that did hit us up on Instagram. For those that do send us messages on Facebook, although they're a pain in the ass to access, so I ask you not to use Facebook.
Shout out Meta.
But please, Instagram, LinkedIn, first name Dustin, last name Owen on LinkedIn. We're at the Loan Officer Podcast on Instagram. Subscribe to the YouTube channel. If you have not already, make sure you have, because the YouTube channel is not just being able to watch the podcast, but we're dropping weekly free training videos and sales coaching segments for your viewing pleasure. If you're tuning in on Spotify or Apple, make sure you give us a 5-star review. For all of y'all understanding, whether it's YouTube, Spotify, or Apple, sharing is caring. Please share this content with coworkers or friends in the industry, or hell, even some of your clients would benefit from a lot of the content that we have created. And if you are interested in coaching, okay, here's one way that you can coach with us for free. And John, if it's free,
it's for you.
It's for me.
Yes.
Yes, that's what John says. If it's free, it's for him. But if it's free, it's for me. If you go to our website, tloponline.com, and you sign up for our newsletter, the newsletter I write, it comes out every Thursday. But by signing up for the newsletter, we will invite you to one free masterclass every single month for life. Okay, that's a live masterclass typically taught by me or one of my friends in the industry who's also a top producer. And then from there, if you want more, then reach out to us and let us walk you through whether it makes sense for you to become a member of our coaching community, whether it makes sense for you to go through one of our boot camps, or maybe you want to upgrade, go all in and be a part of our elite coaching, which is held for only 24 originators per year. So on that note, he's John Coleman. I'm Dustin Owen. You've just tuned in to the Loan Officer Podcast. That is all the time we have for you today, but we do look forward to catching you on the next episode. Peace.